Welcome to KIP REIT's Q4FY26 results briefing. I am Valerie, CEO of KIP REIT. I'll now take you through the group's performance for the quarter, followed by key developments and the group's outlook moving forward. Beginning with FY26 snapshot and key highlights. FY26 marks a record year for KIP since IPO, with revenue reaching 177.1 million ringgit and an NPI at 129.9 million ringgit. This translated into the group's highest ever DPU of 7.26 cents, reflecting the continued growth of its portfolio and earnings base. FY26 was also a very active year for the group. KIP expanded its portfolio through several acquisitions, completed KIP Mall Dampoy AEI, and raised capital through two private placement tranches. The group also proposed the 435 million ringgit acquisitions of Setapak Central, while strengthening its ESG credentials with inclusion in the FTSE4Good Bursa Malaysia Index. On ESG, KIP continued to make good progress, with its FTSE4Good ESG score improving from 2.5 points in FY23 to 3.3 points in FY2025. The improvement was mainly driven by higher environmental and social scores, while governance remained at the highest score of 5.0. Beyond financial performance, KIP was also recognized for its ESG efforts, receiving 2 gold awards at the ESG Positive Impact Awards 2025 for transformations and diversity, equity, and inclusion. These recognitions reflects the group's continued focus on responsible and sustainable growth. In April, KIP was featured in Oriental Daily, where the group shared its strategy of strengthening its neighborhood mall platform through more system-driven management and data analytics. The group also reiterated its growth target to increase AUM from approximately 1.7 billion ringgit to 2.0 billion ringgit through AEIs and acquisitions. In May, KIP was also featured in Starbiz on the outlook for Malaysian REITs following the 10% withholding tax announcement for non-corporate investors. Despite near-term sentiment concerns, the article highlighted that REIT yields remain competitive, with well-managed REITs such as KIP continuing to focus on sustainable distributions, AEIs, and acquisition-led growth. Moving on to the financial performance. KIP delivered a record FY 2026, with the revenue up 30.1% to 177.1 million ringgit and NPI up 34.1% to 129.9 million ringgit. Distributable income rose 41.4% to 74.5 million ringgit, supporting a record DPU of 7.26 cents. Based on the closing price of 84.5 cents as at 22nd July, this translates to an attractive trailing 12-month distribution yield of 8.6%. Gross revenue for Q4 FY26 increased 20.9% year-on-year to 48.2 million ringgit, mainly driven by stronger contributions from the existing malls and the newly acquired assets. On a quarter-on-quarter basis, revenue also grew 8%, reflecting improved operating performance across most of its portfolio. Net property income rose 26.2% year-on-year to 35.4 million ringgit, in line with the higher revenue contribution and increased 99.6% quarter-on-quarter. KIP also continued to benefit from cost optimizations initiatives, including around 15% saving in chiller energy costs and greater utilization of solar energy across its properties. Realized profit after tax increased 33% year-on-year to 20.2 million ringgit, supported by the higher NPI as well as lower financing costs following the OPR reduction. Reported profit after tax rose to 92.4 million ringgit, mainly due to fair value gains on investment properties. Distributable income for Q4 FY26 rose to 20.5 million ringgit, supporting a quarterly DPU of 2.03 cent. The stronger distribution was supported by higher earnings as well as continued cost efficiency from KJTS and solar initiatives. The distribution was supported by higher earnings as well as continued cost efficiencies from KJTS and solar initiatives. KIP continues to offer an attractive trailing 12-month distribution yield of 8.6%, which is among the highest within its peer group and above the peer average of 6.2%. The yield also compares favorably against the other investment alternatives such as EPF, fixed deposit, and 10-year MGS. KIP maintained a healthy balance sheet as at 30th June 2026, with total assets increasing to 1.92 billion ringgit and NAV per unit improving to 1 ringgit and 15 cent. Despite the expansion in its portfolio, gearing remained stable at 39.1%, slightly lower than a year ago. KIP gearing remained stable at 39.1% in FY 2026. The group also continued to optimize its debt profile, with average cost of debt declining to 4.47%, supported by the AAA rated MTN issuance and lower interest rates following the OPR cut. Moving on to portfolio updates. The retail portfolio remains centered on community-focused mass market malls across key locations in Peninsular Malaysia. The portfolio maintains a high average occupancy of 98.7%, supported by a diversified mix of established retail assets and everyday essential offerings. KIP Industrial portfolio comprises 6 assets across Selangor, Johor, and Sarawak, all of which are fully occupied. These assets provide the groups with stable rental income and further diversify the portfolio beyond retail. FY 2026, KIP recorded a net fair value gain of 72.9 million ringgit, higher than 61.8 million ringgit in FY 2025. The uplift was mainly driven by Aeon Kinta City and assets in the central region, reflecting continued value creations across the portfolio. KIP continued to maintain high occupancy across the portfolio, with average occupancy improving to 98.7% in Q4 FY 2026 from 98.5% in the previous quarter. Most assets remain close to or at full occupancy, reflecting the resilience of the group's community-focused portfolio. On lease expiries, the largest portion falls in FY 2027, reflecting 42.7% of gross rental income. The groups will continue to proactively manage renewals, while the weighted average lease expiry remain healthy at around 2.5 years based on the occupied NLA. On the Setapak Central, KIP is proposing to acquire the mall for 435 million ringgit, which will become the group's largest asset by value upon completion. The acquisition is expected to lift AUM to around 2.1 billion ringgit and will be funded through a combination of bank borrowings and private placement. Unitholders' approval was obtained at the EGM yesterday. Setapak Central is a well-established mall with about 515,000 square feet of NLA, 99.9% occupancy, and a diversified tenant mix. It generated 31.3 million ringgit in MPI in 2025, translating to an estimated yield of around 7.2%. Looking ahead, KIP's next phase of growth is anchored on both scale and quality. On the portfolio growth, the proposed acquisition of Starbucks Central Mall will expand the group's retail footprint, taking AUM of over 2.0 billion ringgit and strengthening its pathway towards a larger market capitalization and improved visibility. At the same time, the groups remain focused on quality growth through ongoing AEIs across key assets, aimed at enhancing asset relevance, driving rental reversions, and ultimately supporting DPU growth. This is complemented by its digital transformation initiatives, including ERP implementations, which will strengthen operational efficiency, improve real-time reporting, and support scalable growth. Lastly, the group continued to embed sustainability into our assets and operations, including advancing greenery certification efforts and enhancing disclosures, reinforcing its long-term commitment to sustainable asset management. Moving on to the ESG. KIP continues to strengthen its ESG foundation with improved governance, measurable environmental outcomes, and strong social practices supporting long-term sustainability and stakeholders' confidence. We have now come to the end of my presentation. Thank you.